What's going on, guys? It is the 26th of March, and we got a few different things that came out to show us where the economy is going. Durable orders came out very, very close to what they had anticipated. Based upon briefing.com, we had a forecast of 1.7%. We're about 1.4, which means people are maybe slowing down on what they're buying. Durable goods, meaning big ticket items that last longer periods of time, right? It's not like something that should a disposable item of sorts, right? And you take out transportation, that actually went up. So I'm thinking, transportation wise, it shows that the more than likely people are maybe not their vehicle situation is where they're spending a little bit more of their money, could be right now. Maybe there's things that are opening up a bit there. I have to look at that a little bit deeper. But it's really interesting more than anything was the FHFA and Case-Shiller coming out with year-over-year home prices. Right now, they're saying month over month it dropped 0.1%. But if you go into the year-over-year, we got Case-Shiller saying it's 6.3%, and excuse me, FHFA is saying 6.3%, and Case-Shiller is saying 6.6%. So if you're curious as to whether or not that's a good thing for you as a real estate investor, contact me. I will show you, we'll do some math together, exactly how much that is to you, that kind of appreciation, even cut that in half. How that's a significant growth on your investment. If you're thinking putting 20 to 25% down might not be the best move for you right now because of what's happening in housing or whatever that affect, let's talk about those numbers. If you have any doubt whatsoever about that number or any doubt about real estate investing with appreciation to that extent, we need to talk because there's some things that you're not looking at. If you're thinking cash on cash return is where you're going to focus, or you're going to focus on your cap rates, guys, those are a great metric, but in my opinion, it's a vanity metric. We need to look at everything in a bigger scope, and you'll understand where people that understand this are taking from you, and those who don't understand it are walking away from phenomenal opportunity. So just understand that. Consumer confidence also came in a little bit lower than what was anticipated. The forecast was 106.7, it came in 104.7. Slowing, meaning people may not be spending right the way that they were. And that's what I keep talking about. It's the reason our inflation keeps going through the roof. People won't stop buying shit. So calm down the buying of shit, and maybe might see rates go down a little bit. The Fed might taper some of that back, which could translate to a little bit of a benefit to the mortgages, but it'll probably be a long time, right? I think that we're going to keep going. As said by Joel, by one of the executives here at the company, he says we're going higher for longer. I agree with him. So it's a blue pill market, guys. Higher for longer. That's the whole benefit of that. Let's take a look at why we're saying this. So looking at these MBS charts here, I'm going to show you, our basic chart where we got going on here. This is these last few days of trading. We've got above this particular floor. We've talked about this last week, broke above that floor where this was a ceiling at one point. We now are above that floor, which was a ceiling, now a floor because it's a support. And we keep bouncing off that floor. So it's developing some strength, and we bounced off of it before. We also broke through it before. But here's the thing that I find interesting. We have the point that I've referenced in the past that was established back in 2008 that we basically can't get above. There's just not enough volume of capital going into this security to push it above that. But look at this line that I've drawn here. Now, is it a very, very accurate trend line? I can't say it's 100% accurate, but when we look at the swings above and below, and I'm trying to put equal swings above and below to show the trend, we are following the same trend as this downward channel that I've drawn way back. And I've left this in here for a reason. This downward channel was put in here to show the illustration of the downward movement of the market, and that it's going to continue to trend down, right? Then we had accurate job reporting finally. They kept talking about jobs are so great and we're doing so well in the economy and everybody's working and everybody's earning, and they're cooking the freaking books. So they couldn't cook them anymore back in October. When we talk about the administration we have right now, they're trying to cook everything to make it look like they're doing something, right? If you want to listen to, White House press secretary talking about the policies and how it's, they're doing so much for immigration, we know damn well that's not the case, right? Well, we now are finding out it's not the case with jobs. All the BS they gave with the jobs, the fake reports. Now we saw what happened there. The market turned around significantly, hit that barrier. Now we're getting more real data with respect to that, but it's not having a massive influence. But what's interesting is that influence is following the same downward trend that we had to be for a very long time. Look at that. Look at this downward trend. We're reestablishing a new downward channel. So that's why I'm saying it's a blue pill market. We're going to be going higher for longer, meaning the interest rate's going to keep going higher slowly, but for a longer period of time. How long? We don't know. So we have Warren Buffett, who I keep quoting with respect to the 30-year fixed mortgage, this is the greatest financial instrument in history because it's a one-way bet. Don't get suckered into these people who want to give you the arms, the short-term deals. Never do that. Never get into the high LTV deals, 100% financing. You're literally setting yourself up to get screwed. They're trying to tell you, well, this is for the seasoned investor. It's not for any investor, period. Stay away from that shit. Now, I talked about what Warren Buffett said, right? So one-way bet. If things go down as far as interest rates, you just refinance if you're really that set on a lower interest rate. But if they go up, you protected yourself from the increasing market. Now, the other side of it, Charlie Munger, his business partner, said in early 2023 that we saw 40 years of declining interest rates. He and Warren anticipate 40 years of increasing interest rates. What did I just show you? Higher for longer. Remember that, guys. It's a blue pill market. And I don't know how long that blue pill is going to keep in effect, but it's going to stay there for a little while until it finally wears off. Talk to you guys Friday.